The 19th of May, 2010, 1 o'clock Sydney time. Trading in Clive Peeters. Limited is suspended on the Australian Securities Exchange. By the close of business, McGrath Nicol Administrators. PPB Advisory Receivers, appointed by the National Australia Bank. $160 million in debt. 45 stores across Australia. 1,300 employees. A retail empire that 2 years earlier was worth $500 million and rolling out into Western Australia at full speed. The most loved kitchen specialist in Victoria, gone in a single trading session. And the easy explanation, the one the press would repeat for 15 years, was a senior payroll accountant from Pakenham, Victoria, named Sonya Causer, who had stolen over 25 months $19,365,768 from her employer. The Supreme Court of Victoria would later reject that easy explanation. Chapter 1. The Founders. The 5th of February 1993, Melbourne. Two men signing corporation papers for a new private company. Greg Smith and Peter Lord, both are former accountants. Both have spent 2 decades inside Australian retail. They are buying the trading name of a small Melbourne appliance shop called Clive Peeters, first opened in 1973, and adding an extra E to the spelling. The brand is local. The future the two accountants see is national. The hardship trigger is sectoral. The recession of 1991 has cleared the market of a generation of small electrical traders. Banks have foreclosed on dozens of family-owned suburban shops. The country is in the worst economic downturn since the 1930s. Smith & Lord buy the Clive Peeters name because the original owner is retiring and the brand is about to disappear. Accountants becoming merchants in the worst possible year to do it. The Peeters misspelling, the double E, is the brand differentiator. The phone book is full of Peeters. There is only one Peeters. A brand must be unique enough to defend. Through 1993, the company operates as trustee for the Clive Peeters Electrical Trust. The corporate structure is conservative. The financial controls are tight. 2 ex-accountants do not extend credit they cannot collect. They do not stock product they cannot sell. They do not hire staff they cannot supervise. The brand positioning settles within 2 years. Kitchen specialist, Westinghouse, Kelvinator, Simpson, Chef. The Australian-made appliances every suburban kitchen has held for 50 years. The discount wizard. The "we will beat any price" guarantee. The pitch is direct. Every fridge, every oven, every washing machine an Australian household needs. Sold for less than Harvey Norman. Sold with installation. Sold with the kitchen specialist who can match 3 appliances to 1 benchtop. Through the 1990s, the chain grows store by store across suburban Victoria. Brisbane opens in 2001, the first interstate store. On the 1st of April 2002, operations transfer from the trust structure to the company directly. If you watched our Toowoomba Foundry episode, you already know what happens to Australian companies that grow on the back of one strong manufacturing base. The Adelaide steamship empire of the late 1980s, John Spolvens, Latvian-born raider, owner at one point of David Jones and Woolworths and Penfolds and Petersville Slight, proved that the outside corporate raider threat could destroy any Australian retailer. Smith & Lord are the inverse generation. The threat they never planned for was inside the building. Chapter 2. The WW2 Ecosystem. Edward Street, Orange, New South Wales Central West, 1942, the Orange Small Arms Factory. A purpose-built feeder works for the Lithgow Small Arms Factory 90 kilometres east. Lithgow cannot meet wartime demand on its own. The Australian Army needs Lee Enfield .303 rifles for New Guinea, North Africa, the Pacific. 10 feeder factories are built across regional New South Wales, Orange, Forbes, Wellington, Mudgee, Cowra, Young, Dubbo, Parkes, Portland and Katoomba. By the end of 1942, the Lithgow Group employs approximately 12,000 Australians. Across the two world wars, they will produce approximately 640,000 Lee-Enfield rifles, the rifle that fought at Tobruk, the rifle that fought at El Alamein, the rifle that fought at Wewak. The rifle was milled in part on the floor at Orange. 1946. The war ends. The Orange Small Arms Factory does not close. Email Limited, a New South Wales electrical company formed in 1934, acquires the site, trades the operation as EMCO and Elcon. The same machine tools that milled rifle parts in 1942 begin milling refrigerator compressors in 1947. The same workforce, minus the men who didn't come home, begins building electricity meters, pumps, radio parts and refrigerators on an Australian production line. The 7th of September 1949. 26 displaced European men step off the train at Orange. Baltic, Polish. The first group of post-war migrants are assigned to EMCO. By 1953, the factory is recruiting skilled tradesmen directly from Germany. Tony Seymour, German toolmaker, in his own words, recorded by the New South Wales Migration Heritage Centre. I started work at EMCO in January 1953 as a toolmaker, and I worked there for 30 years. I was among a group of skilled German toolmakers making plastic moulds for refrigerators. Ferdy Boers, Dutch migrant, leading hand in the air conditioning area, photographed at the email factory in 1962, photograph held by the Orange and District Historical Society. The factory floor was photographed for 2 decades by Lindsay Marks, staff photographer at the Central Western Daily. His images of the EMCO production line in the 1950s and 1960s sat in the newspaper archive unseen until 2016, when the Orange and District Historical Society exhibited them at Orange City Library. The men and women who built the fridges Greg Smith would sell, photographed by a country newspaper photographer in the same factory where the Lee-Enfield rifle was milled in 1942. By the 1980s, Email controls Kelvinator Australia, acquired 1980. By the 1990s, Email is Australia's largest manufacturer of major household appliances. Westinghouse. Kelvinator, Simpson, Chef. The 4 brands that anchor every Clive Peeters showroom from Bayswater to Brisbane. Same machine tools, same workforce. Same town. The forge that made the rifles that fought in Wewak is the forge that makes the Kelvinator fridge in every Australian kitchen by 1970. Read that again. Chapter 3. The Build. Through the mid-1990s, the first Clive Peeters store profits hold steady. By 2000, the chain has 8 stores across Melbourne. Smith & Lord plough every dollar back. They opened Brisbane in 2001, the first interstate store. New South Wales and Queensland expansion continues through the early 2000s. The retail format is locked, a single large kitchen and appliance showroom of 3,000 to 5,000 square metres, Westinghouse and Kelvinator anchoring the floor, with Bosch, Miele, Smeg, Whirlpool and Asco providing the European premium tier. The 14th of July 2005. Clive Peeters Limited is registered as a public company. The 22nd of September 2005, Australian Securities Exchange listed under the ticker code CPR. Initial public offering price $1 per share. Smith & Lord retain approximately 65% of the company between them. Each has built a personal stake of roughly 41.5 million shares. The 2005 acquisition was the strategic anchor of the float. Rick Hart, Western Australian appliance retailer, founded 1971, 4 big format stores across Perth and Bunbury, is acquired in a deal valued at $3.5 million cash and scrip according to WA Business News, though Wikipedia separately records $10.5 million. Rick Hart joins the Clive Peeters board as Executive Director in August 2005 and resigns in June 2006. The Rick Hart stores retain their trading name. Clive Peeters now spans 5 states. The 2007 peak is sensory. Every Victorian household that watched commercial television between 2003 and 2009 can sing the jingle. Clive Peeters, Easy, the discount wizard. We will beat any price. Heavy rotation through Channel 9, Channel 7, Channel 10. By the end of 2007, the chain runs 45 stores, employs approximately 1,300 staff, stocks 140 brands and 20,000 individual models. April 2007. The share price hits $2.90. First half. FY 2007 profit up 51.7% to $8.9 million, driven heavily by the Rick Hart Western Australian contribution. Smith & Lord each sell 1 million shares at $2.60 and still hold 65%. If you've watched our Dick Smith Electronics episode, you know what the December 2013 IPO at $2.20 looked like, and how the same $520 million market capitalisation evaporated inside 26 months. Clive Peeters is the structural twin. Both retailers floated on the back of expansion stories. Both peaked within 18 months of listing. Both were destroyed by internal mechanisms. Chapter 4. The Vulnerability. 3 structural weaknesses define what Smith & Lord built. The first is what trade analysts later called the deadly middle. James Thompson of Smart Company, 20th of May 2010, verbatim, Clive Peeters, which had 45 stores compared with Harvey Norman's more than 100 stores, may have found itself in a dangerous middle ground, not big enough to compete with the scale and financial muscle of Harvey Norman, and too big to be seen as a specialist niche retailer. 45 stores against more than 100. Forced to fight discount wars, Harvey Norman could always win on volume. Too big to retreat to a specialist niche. Too small to dominate any single state. The second weakness is the debt. By the end of 2009, Clive Peeters carries approximately $160 million in total debt. The aggressive 2005 to 2008 store rollout was financed through bank facilities, not retained earnings. Survival depends on the National Australia Bank rolling over $38 million in long-term facilities and extending the working capital overdraft month by month. Half-year revenue for the 6 months to the 31st of December 2009 is $252.5 million, down 5.32% year-on-year. Half-year loss, $424,000. The first reported loss in the company's 17-year history. The NAB facility is now a survival instrument. The third weakness is the one that destroyed the company, a single trusted accountant with sole online banking authority over payroll. No second signatory required for transfers up to the bank's daily limit. No segregation of duties between the general ledger and the subsidiary trade creditors ledger. No quarterly reconciliation of the 2 ledgers. No external audit of the payroll disbursement process. The auditors checked the totals, not the individual destinations. Smith & Lord were ex-accountants. They built the company on tight financial control. They missed the one control that mattered. If you've watched our international ASICO film, you'll remember Michael May, Mercedes-trained MD, arrived at IVCO in February. 2020. Closed the Dandenong factory in June 2022, promoted to Turin in 2024. May closed an Australian icon because the corporate parent above him had structurally divested manufacturing. Smith & Lord are the inverse case. The founders did everything right except install dual signatories on the payroll system. The threat to Clive Peeters did not come from Turin. The threat came from Pakenham, Victoria, where Sonya Causer drove to work every morning, parked at the Bayswater North head office, and quietly transferred money to the 8 bank accounts only she knew about. Chapter 5. The Mechanism. Sonya Causer is born the 7th of January 1971 in Victoria. By the early 2000s she is married, raising a young family and working as a senior financial accountant in the appliance retail sector. Her daughter Kiralee is born the 1st of March 2006. Causer's salary at Clive Peeters, approximately $125,000 a year. Her duties through 2006 and into early 2007, standard senior accountant work, financial reporting, journal entries, ledger reconciliation. Trusted from day one. April 2007. Causer's duties expand. She is now responsible for payroll. Specifically, she now authorises the salary remittances for all 1,300 Clive Peeters staff, the superannuation guarantee payments, the PAYG group tax remittances to the Australian Taxation Office, and the payroll tax remittances to the state revenue offices in Victoria, New South Wales, Queensland, Western Australia and South Australia. A single accountant. 1,300 wages, 5 state revenue offices, the Australian Taxation Office, no second signatory. The method, recorded verbatim at paragraph 13 of the judgment in R.V. Causer and corroborated by the company's own reconstruction of events. Causer obtains approval for legitimate payments from her supervisors, genuine ATO remittances, genuine payroll tax transfers, then alters the destination, BSB and bank account numbers before the funds are released. The amount approved is correct. The recipient on the records is correct. The actual recipient is one of 8 bank accounts controlled by Sonya Causer. The general ledger records the legitimate payment. The subsidiary trade creditors ledger, the only one that shows the true destination of the funds, sits on her desk and only she has access to it. For 24 months, no one in the building compares the two ledgers. The 11th of July, 2007. Causer takes her first withdrawal, $64,941. The 20th of July 2009, exactly 2 years and 9 days later, she takes her last. The final tally, 90 withdrawals involving 125 individual payments to 8 bank accounts. Individual transfers range from $64,000 to $572,000. Total $19,365,768. An average of $186,200 stolen every fortnight for 104 consecutive fortnights by a payroll clerk paid $125,000 a year. Sonya Causer was paid $125,000 a year to manage the payroll. She stole $19,365,000 from the same payroll. She used some of the stolen money to buy Clive Peeters shares. She became one of the company's largest private shareholders. She voted at the annual general meeting. She helped audit her own fraud when it was first detected. Read that again. Chapter 6, The Peak, April 2007. The Clive Peeters. Share price reaches its all-time high of $2.90, half-year profit up 51.7%. The interim dividend is lifted. The board approves a strategic plan to expand the store footprint further. The Western Australian Rick Hart contribution is exceeding the prospectus forecast. The Brisbane stores are trading. The retail format is exporting smoothly to interstate markets. Smith and Lord each sell 1 million shares at $2.60. Each retains approximately 41.5 million shares. Combined ownership still 65%. Each takes home approximately $2.6 million in cash from the sell-down and remains among the wealthiest unlisted retail figures in Victoria. The Bayswater North head office is full of confidence. Stephen Hamilton, Clive Peeters, Chief Operating Officer through the 2005 to 2007 growth phase, resigns in April 2007 after what the company calls mutual discussions. Greg Smith offers a brief Australian Securities Exchange statement. The board will over the coming weeks consider all management restructuring alternatives before a final decision is made on the appointment of a replacement Chief Operating Officer. The COO, who oversaw the major growth period, leaves at the moment of peak share price. He is not replaced. Smith concentrates Managing Director and Chief Operating Officer responsibilities in himself. The board configuration in mid-2007 sets the operational frame for the next 2 years. Chairman Brian Pollock, Managing Director Smith, Co-founder Lord as Non-Executive Director, no COO. The hands-on leadership of the company sits with one man, Smith, and below him a finance function led by Financial Controller Steve Rowarth, with a senior financial accountant named Sonya Causer running payroll. The 11th of July 2007, 13 weeks after the April share price peak, 3 months after Hamilton's COO resignation. The week that Smith is most concentrated on the strategic plan and the new store rollout, the moment the founders are most distracted by the company's success. Sonya Causer takes her first withdrawal of $64,941 from the Clive Peeters payroll. The company is at its all-time high. The fraud begins the same quarter. If you've watched our Rover Mower film, you'll remember how the peak market share years of the late 1990s coincided exactly with the first offshoring contracts that would destroy the brand. The pattern repeats here. Australian companies do not fall from peaks. They fall because of the peaks. The confidence that drives growth is the confidence that turns off internal scrutiny. The 2007 to 2008 strategic plan was the document that distracted Smith from the payroll, the COO vacancy that distracted the operational leadership from the back office, the rising share price that distracted the board from the trade creditors' ledger. Through 2007 and 2008, the chain rolls out. Smith and Lord work 80-hour weeks negotiating leases, signing brand supply contracts, courting franchise partners. Causer in the back office at Bayswater North quietly approves payroll remittances and quietly diverts funds to her own bank accounts. The peak month is the same month the theft begins. Chapter 7. The Hubris. The Judgment of Justice Jack Forrest, paragraph 15, the line that defines the entire case. Primarily as a result of negotiations over the internet, none were purchased at auction. By late July 2009, Sonya Causer controls 44 investment properties purchased over 24 months with money stolen from her employer, houses across suburban Victoria, investment units, a property portfolio managed through real estate agents, rental yields collected on the side, a payroll clerk in a Bayswater North office negotiating purchase contracts on her lunch break, then returning to the payroll system to approve the next remittance. The shopping list runs across paragraph 16 of the judgment. A motor vehicle valued at $110,000 for herself. Newspaper reporting identified the car as a $105,000 Audi all-wheel drive. A motor vehicle valued at $80,000 for her husband. A motorbike valued at $20,000 for her husband, $17,000 in jewellery, a Holden station wagon, a Toyota Land Cruiser. Clive Peeters, shares purchased on the market, she became one of the company's largest private shareholders, voting at the annual general meeting with money stolen from the company she voted at. Fence submissions described Causer as suffering a delusional disorder in which she regarded herself as a property wizard. Forrest J. finds she had no gambling habit, no drug habit, no significant financial distress. The diagnosis is more chilling. She simply loved being the winning bidder, online. 44 properties, none of them bought at auction, None of them inspected in person. All of them negotiated on the internet at her office desk. The chilling subtext that runs through the entire judgment: she kept living in her ordinary Pakenham house. Drove ordinary cars where colleagues might see. Maintained a $125,000 lifestyle in plain view. The houses on the internet were a parallel life that her colleagues, her neighbours and her property managers all saw separate pieces of, but no single witness ever assembled the full picture. Greg Smith, verbatim to The Age, 5th of December 2009. She did obviously have a passion for property and loved buying and selling property. She liked going to auctions and being the winning bidder. There was no outward sign that would give you an indication that she was the type of person that would do this. Certainly no ostentatious lifestyle. The grotesque mechanical irony. Causer was the financial accountant who approved the company's GST and PAYG remittances to the Australian Taxation Office. She was also the buyer who paid stamp duty on 44 property purchases to the Victorian State Revenue Office over the same 2-year period. No state agency cross-checked its own records against payroll tax remitter names. If you've watched our Dick Smith Electronics episode, you remember Nick Aboud's Bondi Junction Move Store, Apple Store mirrored walls, perfume-scented fitting room, $50 phone covers. Romance was born styling. Aboud's hubris was visible. 3 stories of polished glass on Oxford Street. Causer's hubris was invisible. 44 internet houses bought from an office desk in Bayswater North, all of them owned by a payroll clerk on a $125,000 salary. The cleverer villain is the worse one. Chapter 8. The Warning. The warnings between April 2007 and July 2009 are catalogued only in retrospect. A senior accountant on a $125,000 salary amasses 44 properties in 24 months. The general ledger and the subsidiary ledger don't match, but no one in the building runs the comparison. The Bayswater North payroll system has one online banking signatory and no second signatory check. Causer's husband owns an $80,000 car and a $20,000 motorbike on what would have to be a single Victorian income. Nobody at the family-owned business is curious. Fraud expert Darryl Swindells, partner at HLB Manjudd Sydney, speaking to the trade press after the scandal broke. There are countless frauds taking place in businesses of all shapes and sizes that are small enough to go unnoticed. While most organisations believe they have controls in place over payments from bank accounts, often these are not working as well as they should because they have not been checked since they were set up. The macroeconomic context masks the bleed. September 2008. Lehman Brothers collapses. The global financial crisis pushes Australia toward its first recession in 17 years. The Rudd Labor government responds with a $42 billion fiscal stimulus rolled out through late 2008 and 2009. $900 cash payments to working families. White goods sales spike, Australians spending the stimulus check on a new fridge or washing machine. Clive Peeters. Revenue holds up through 2008 and into early 2009 because of the stimulus. The fraud is hidden inside an artificial demand bubble nobody at the board level acknowledges. Same-store sales appear consistent. New store rollout continues. The 2008 annual report praises the company's resilience through the crisis. The cash leaving the payroll system that year was running millions above what the actual payroll cost, but no one in the building was running the comparison. Unlike the Dick Smith Electronics case 6 years later, no external short seller publishes a forensic report on Clive Peeters. There is no Forager Funds. There is no Matt Ryan. There is no Joe Aston column in the Australian Financial Review pulling the trade creditor reconciliations apart. The Australian financial press has Clive Peeters slotted as a mid-cap retail growth story, and growth stories with steady share prices through a global financial crisis attract praise, not forensic scrutiny. The fraud only stops because of a routine annual audit. The audit only catches it because one financial controller, separated from Causer's payroll system, runs a comparison no one before him had thought to run. If you've watched our Toowoomba Foundry video, you'll remember the Australian Manufacturing Workers Union's Victorian Secretary, Lee Duem, condemning the unnamed CMI Industrial Director in 2012. ASIC named no one. The Clive Peeters case is the inverse and identical. Causer's name is in every headline by August 2009. The director who hired her again on bail in 2010 at the unnamed medical products company that did not run a $100 police check is not. The most damning warning came after detection, not before. While on bail in 2010, Causer obtained a new job as an accountant at a medical products company. A police check costing less than $100 would have surfaced her pending charges. The medical products company did not run one. The control failure that allowed her to steal $19 million from Clive Peeters in 2007 was the same control failure that put her back in an accounting chair in 2010. The pattern that destroyed the company was not unique to the company. Chapter 9. The Collapse. The 30th of July, 2009. A Thursday, late evening. Steve Rowarth, financial controller of Clive Peeters Limited, asked his wife to drive him the short distance from their Warrandyte home to Greg Smith's home. He needs to tell his managing director something face-to-face. He cannot say it on the phone. The phrase Rowarth uses, recorded in the Age feature, published 5 months later by Wayne Taylor. A rat in the ranks. Rowarth's team had been trying to work out, through July 2009, why there were multi-million-dollar discrepancies in the company's ledgers. The general ledger said one thing. The subsidiary trade creditors ledger said another. The two were diverging week by week. By that Thursday evening, Rowarth had run enough reconciliations to know the size of the hole was not a clerical error. It was not in the millions singular. It was in the tens of millions. The next morning, the audit team begins interviewing the payroll department. Sonya Causer is interviewed by senior management. She lies. Paragraph 18 of the judgment records the lie. She is asked to assist the audit team in understanding the discrepancies. She does. For some hours, she helps the auditors investigate her own fraud. The 12th of August, 2009. The Age. Carson and Battersby, business front page. Clive Peeters left reeling by $20 million sting. The scandal goes national. Trading on the ASX is briefly suspended. The civil action against Causer launches in the Supreme Court of Victoria the same week. Causer is sacked. The company tries to recover. The brand never does. The 9-month death spiral runs through to May 2010. Trade creditors demand cash on delivery. The National Australia Bank tightens facility terms. The post-stimulus consumer slump arrives. Australian white goods sales fall in March and April 2010 as the Rudd cash payments stop circulating. The half-year result to the 31st of December 2009 is the first loss in the company's history. Smith negotiates frantically through April and May 2010, refinancing proposals, retail support packages, asset disposals. Nothing closes in time. The 19th of May 2010, approximately 1 o'clock Sydney time. Trading in Clive Peeters Limited is suspended on the Australian Securities Exchange. The directors call in McGrath Nicol as voluntary administrators, partners Colin Nicol, Keith Crawford, Matthew Caddy. The same day, the National Australia Bank appoints PPB Advisory as receivers, partners Philip Carter and Daniel Bryant. $160 million in debt, 45 stores. 1,300 staff. 1 trading session. The 28th of May, 2010. First creditors meeting. McGrath. Nickel is replaced by Ferrier Hodgson, partners Brendan Richards and George Georges. The 2nd of July 2010. Sale completed. Harvey Norman through its acquisition vehicle. The Durney Group takes the trading assets for $54,750,000 including GST. Greg Smith is replaced as Managing Director by Nick Papa, a former Harvey Norman franchisee. Rick Hart, verbatim to Crikey, 20th of May 2010. All of the misfortune can be traced back to the embezzlement. That was the tomahawk in the chest. Crikey counter verdict, same day. The real villain was the firm's poor business model and insipid management. The argument over what killed Clive Peeters started before the company was even buried. Chapter 10. The Courtroom. The 20th of August, 2010. Supreme Court of Victoria. Justice Jack Forrest. Case R.V. Causer, 2010. Victorian Supreme Court, 341. The charges, 24 counts of theft, contrary to Section 74 of the Crimes Act 1958, treated as a continuing criminal enterprise under Part 2B of the Sentencing Act 1991. Maximum sentence per count, 20 years. Maximum aggregate exposure, 480 years. The plie, guilty at the earliest possible opportunity. The facts. Admitted, total misappropriated $19,365,768. Total recovered $16,326,662. Net loss to the company, approximately $3 million. 44 properties controlled, 90 withdrawals, 125 individual payments, 8 bank accounts. Period 11th of July 2007 to 20th of July 2009. String Forrest J. verbatim, rejecting the company's causation argument. It is clear that the cash flow of the company was significantly compromised by your actions at a time when it was under financial stress, and Mr. Smith's concerns are understandable. However, there were a number of other factors, independent of your actions, which also contributed to the company's collapse. Your actions could not be regarded as a primary, dominant or triggering cause of the collapse. Read that again. The Supreme Court of Victoria, looking at the largest theft by a trusted person in the state's history, ruled that the theft was not the primary cause of the company's collapse. The Rick Hart tomahawk in the chest image was, in the court's considered view, wrong. The company was already dying. The deadly middle. The $160 million debt load. The post-stimulus consumer slump. The 45 stores trapped between Harvey Norman's scale and the kitchen specialist niche. Causer was the hastener, not the killer. Forrest J's verbatim, the mercy. I have little doubt, given your background, that you will not reoffend, and indeed I hope that upon your release you are able to return to your family and the workforce and become a useful member of society as you had been prior to July 2007. The sentence, 8 years imprisonment, 5-year non-parole period. The mitigation, earliest possible guilty plea, substantial cooperation with auditors, 2 autistic children dependent on her, family home sold in restitution. Husband left as sole carer. Same court, same judge, same day. Chartwell Enterprises Company Secretary Ian Stewart Rao sentenced to 31 months over a $68 million Ponzi scheme. Causer stole less. Causer got more. The disparity is what the judge weighs. A position of trust, breached repeatedly over 25 months against a man who joined a scheme already running. Trust is the aggravation. If you've watched our Dick Smith Electrolux film, you'll remember the New South Wales Court of Appeal ruling, DSHE Holdings versus Abood in 2022, which found both Abood and Potts breached Section 180 of the Corporations Act over the $11.826 million. August 2015 dividend. The Australian Securities and Investments Commission banned no one. The pattern at Clive Peeters is the inverse and identical. ASIC investigated. ASIC issued no banning order against Greg Smith, no banning order against Peter Lord, no penalty for the control failure that enabled the theft. The courts name the villain. ASIC sanctions no one. Chapter 11. What remains? Stand at the former Clive Peeters head office in Bayswater North, Victoria in 2026. The building where, on a Thursday night in late July 2009, Steve Rowarth gave his wife the keys to drive him to his managing director's house, because some things you cannot say on the phone. Walk into a Harvey Norman store in Melbourne's eastern suburbs in 2026. The building may well have been a Clive Peeters until the 2nd of July 2010. The Westinghouse fridge on the showroom floor was built at the email plant in Orange. The Kelvinator stamp on the back is the brand email acquired in 1980 and ran until the Electrolux Sweden absorption. The brand was extinguished on the 11th of August 2011. The date Gerry Harvey publicly told Smart Company the Clive Peeters brand was stuffed and tainted beyond repair after one of Australia's most notorious embezzling cases. 13 Clive Peeters and 5 Rick Hart stores converted to Harvey Norman. 2 became Joyce Main. 7 closed outright. Drive 10 hours northwest to Edward Street, Orange, New South Wales. The Orange Small Arms Factory of 1942. The Emco Refrigerator Works of 1946. The Kelvinator Plant of 1980. The Electrolux Australian site of 2001. The Oral History Project recordings of 1996. Tony Seamer, the toolmaker, Ferdi Bors, the leading hand, photographed in 1962 by Lindsay Marks. The factory that made the Lee Enfield rifle that fought at Tobruk made the Westinghouse fridge that anchored every Clive Peeters showroom. The Westinghouse brand still trades, owned now by Electrolux Sweden. Australian-owned major appliance manufacturing is a memory. Lesson 1. Trust without verification is a vulnerability. The Clive Peeters control gap, a single trusted accountant with sole online banking authority and no second signatory, destroyed a $500 million retailer. $19,365,000 over 104 fortnights. Greg Smith and Peter Lord were ex-accountants who built the company on tight financial control. They trusted the one person they should have been auditing quarterly. Every Australian mid-cap business in 2026, with a single trusted bookkeeper, should know the Sonya Causer story. Lesson 2. The middle is the killing zone. 45 stores against Harvey Norman's 100+. Too big to win the specialist niche. Too small to win the discount war. The post-GFC slump finished what the fraud started. The dangerous middle ground is the structural pattern no Australian retail strategist will admit until the company is gone. Lesson 3. A single villain is a comforting myth. Justice Forrest refused to let Sonya Causer carry the entire blame. The fraud was the tomahawk. The patient was already sick. The deadly middle. The $160 million debt. The post-stimulus slump. The structural killers were already in place. Causer made the funeral faster. Australian financial journalism wanted the easy story. The Supreme Court of Victoria refused that story. So should we. The 19th of May 2010, 1 o'clock Sydney time, the trading halt, the McGrath Nicol administration, the PPB advisory receivership, the $54 million Harvey Norman sale on the 2nd of July, the brand extinguishment on the 11th of August 2011. Sonya Causer served her sentence. Greg Smith was replaced by Nick Papa. Peter Lord disappeared from the public record. Steve Rowarth, the financial controller who broke the case open with a Thursday night drive from Warrandyte, is the named hero. Rick Hart called the embezzlement a tomahawk in the chest. The Supreme Court of Victoria called it something else. The Westinghouse fridges still hum in Australian kitchens. The Orange Plant, the World War II small arms factory that became the heart of Australian white goods manufacturing, is gone too. 8 years in prison for the largest theft by a trusted person in the history of Victoria. And the company died anyway. Trust killed Clive Peeters.